again, Solis Wealth family. Greg Solis here with the update. Hey, listen, I got some good news and I got some bad news. Well, let's start with the good news first. Good news is the markets have had a pretty good year. As I record this today, after that big correction we had earlier in the year in April when the S&P 500 was down 20%, we have rallied back over 35% on the S&P 500, which is an extraordinary run. Year to date, the S&P 500 is up almost 16.5% thereabouts. The NASDAQ's even up a little bit more. So it's really been a good year in the equity markets. That's great news. In addition, the bond market's done pretty good. Interest rates have come down a little bit over the course of the year, and that, of course, elevates the bond prices. So bonds have held up pretty good, a little bit of appreciation. Equity markets have done real well. Gold's done well, and so overall, it's been a great year. That's the good news. The bad news is it was really hard this year to as far as the capital gains are concerned. So, as you know, you've heard me say many times before, we never want to let the tax tail wag the investment dog. What we mean by that is that we believe it's very important that we keep the asset allocation model the way that it needs to be for the client that we're working with. So we want to make sure that we line up the risk tolerance with their goals and their objectives, and we want to make sure that we keep that allocation properly aligned. Behind the scenes, there's a lot that goes on to construct these portfolios and create the allocation that's appropriate for you. We use outside research, we use LPL's research, we use very sophisticated technology to put together and construct these asset allocation models for you. And we feel it's very important that we keep those allocations in proper alignment. That means that during these bull markets, we have to realize some gains in that process of selling the asset classes that are overweighted, and then of course buying where we're underweighted. So this goes on an ongoing basis. Behind the scenes, there's a lot of that going on. So in these years where we have a good market like this, it gets very difficult to not trigger some capital gains. So I want to kind of give you the heads up on that. Expect some capital gains this year, some realized capital gains. Again, we do everything we can behind the scenes to harvest. We do what's called tax harvesting, where if we have some investments that have some losses, we'll sell those assets to realize that loss, to offset some of your gains. But we do that without compromising the integrity of the portfolio, which is really difficult to do. So there's a lot of moving parts to make all this come together. But the point being, we've had a good year. Markets have been good to us. The models have worked well, but we've had to realize some gains. So 1099s, as you know, will come out after the first of the year. We're looking at each account very closely to see if there's some tax harvesting opportunities. So no, we're trying to reduce that tax liability as much as we can, but it's just as part of the process. The good news, bad news. Good news, we're making money. Bad news, we're gonna have to pay some taxes. So wanted to let you all know that. I hope you are all having a great holiday season. I know we had a great time with our family during Thanksgiving and looking forward to the Christmas holiday as well. So my very best to you and your family as you enter the holidays. Take care and God bless. Hey, if you're finding these videos helpful, go ahead and hit like and subscribe, and make sure you click on the notification bell as well so that you can get it every time. Thank you.